Hi all, just going to give you a few seconds to enter the room and well, we've opened the room a little bit early today, so just going to give you another minute to enter the room and we'll get this the webinar underway. So guys, this is QM part 2. So look, if you've been looking at the QM pattern since last week's presentation, please do note any setups you've seen or any setups you've taken, and we'll take a look at these at the end of the presentation. Look, I see someone's putting their hand up in the chat box. Oh, they've put their hand down now. Fantastic. So look, okay, let's get this started. So look, welcome everyone. Thank you very much for taking the time out of your day to be with us. By way of an introduction, my name's Aaron Hill, and I'm one of the market analysts here at FP Markets. Look, the presentation, as you can see on the slide, I just want to double check that I am sharing the correct slide. Okay, excellent. So look, the presentation is a follow-up to the webinar I gave on the 19th of June on the Quasimodo formation. That was an introductory webinar. As I mentioned, the Quasimodo arrangement provides traders with an almost objective method of plotting support and resistance in the market. This can, of course, be a blessing for newer traders struggling with the many ways in which traditional support and resistance can be applied. So before I continue, I just want to check if I'm coming across loud and clear and the welcome slide is visible. Guys, if you can just do me a favor and let me know in the chat box, just Y or N, just to let me know I'm not talking to myself, and we can get this underway. All right, so it's very, all right, excellent. Hi, Aaron. Hi, I was going to say hi, Aaron, to myself then. Hi, Raphael. Very nice to see you again. All right, so I take it we can all hear me. That's fantastic. Right, so there will be a webinar. There are recordings of this presentation available through a number of avenues. Look, the usual avenues, of course, are the YouTube channel, the FP Markets YouTube channel, and of course the main website, which you can find the archived webinars under resources on the upper menu of the main web page, and under the education column, you'll come across the webinars selection. So with that being said, hi, Dr. AM. I think that's your name. I'm so sorry if I've mispronounced it. Right, so quick disclaimer, guys, trade responsibly. Derivative products are highly leveraged, carry a high level of risk, and are not suitable for all investors. Features of our products, including fees and charges, are outlined in the relevant legal documents available on our website. So, okay, so with that out of the way, let's really get into the topics for this evening's presentation. So I don't intend to really bore you guys with I'm just trying to find there it is, with sorry, just bear with me. Seem to be having a few, there we go. So as I said, I don't intend to bore you guys with repeating old content from last week's presentation, but as I'm sure you understand, it's imperative that I review what we covered last week when we met, which is so we're all on the same page for this evening. So what I'll be looking at is as you can see here, are a recap of pattern structure and application. And we'll then look at chart examples. So we're looking at the correct application of QMs on charts, and then importantly, we'll look at some live analysis with Q&As. Look, I would hold the questions till the live analysis. I can answer the questions on the charts, but if you must ask questions regarding any of the content I'm showing, please do go ahead as well, and I will happily answer that and clear up any confusion on the slide as we go. Right, so with that out of the way, look, for those who were at my previous presentation, you may remember this slide. You know, although this slide is basic in form, I believe it does a good job in showing you the arrangement of the QM pattern, which is also sometimes referred to as the over and under formation. As you can see, we have the bullish, we have a bearish Quasimodo pattern and a bullish Quasimodo pattern. Now, the QM pattern is a reversal signal. It's a reversal structure. And now this is a configuration, this is a pattern that forecasts points on the chart that where price could effectively reverse direction. So this not only refers to trend reversals, so we're looking to catch bottoms or tops. This also can provide you ways of buying and selling within the trend. So you're dip buying within an uptrend, and you're selling rallies within a downtrend. Now, in terms of the QM patterns, the Quasimodo, the name of the pattern, I did briefly touch on this last week, but look, to tell you the truth, I'm not sure where the name Quasimodo was originated from. Through my own research, I found that it was largely based on this handsome-looking chap at the bottom of the screen. As you can see, he has a deformed shoulder. The poor chap has deformed shoulders and a rather misplaced head, if you will. So we have a bearish Quasimodo pattern that looks similar to his appearance, if you will. So this chap is named Quasimodo from the Hunchback of Notre Dame, of course. And yes, so but look, there are other names for this, as I mentioned. I've also seen this pattern referred to as the over and under pattern. I'm sure you can see why, over and under pattern. I've also seen this pattern quite simply labeled as a fake out formation, and I tend to agree with this because all this really is a fake out formation. Now, just as a quick overview of the structure of the pattern, we have, I'm just going to get the pen out, we have 5 legs within the formation. 1, 2, 3, 4, 5. So the first leg is the initial leg into the formation. Now imagine this is an uptrend. This is a higher high, higher high, higher low, and a higher high, higher low. So look, at point 1, this is part of the trend. I'm not going to bore you with trend studies, as I assume we all understand how a trend is created. So leg 1 is part of the uptrend. Leg 2 is also part of the uptrend. We form a higher high followed by a subsequent higher low. That's followed by a subsequent higher high. These are all parts of the overall trend. It's only at point 4 where we may have a potential bearish Quasimodo formation. Point 4 breaks the higher low at this point here and breaks lower and forms, I'm sure we all know this, guys, a lower low. Now, what this will do is attract bearish trend traders. I'll get into the psychology shortly, but as you can see, leg 5 is the final leg, and that joins up with the left shoulder created by legs 1 and 2. So it's the peak between legs 1 and 2, and all you do is extend that level across all of this price action here to form a Quasimodo formation at this point here. Nothing more. Okay, so this is why I believe it genuinely is a fake out, because of this. Okay, we form a bull trap above here. A bull trap is, as its name implies, it traps the bulls, traps breakout buyers above here and then reverses. The same with the bullish Quasimodo formation. I'm not going to go into that, but all it is a mirror version of the bearish Quasimodo pattern. So if there are any questions, do let me know and I'll clear this up on the slide. If not, I will move on and we'll get to the more interesting parts, I believe. Let me just remove the drawings. Okay. So, okay, also really quickly, I wanted to review what we regarding a head and shoulders top and a bearish QM pattern. Now, as you can see on the chart, I have separated the bearish Quasimodo pattern, which is from the previous slide, and I've applied a head and shoulders top pattern. Now, the reason I've put this, I've included this within the presentation is quite simply because the number of questions I get, what's the difference between a bearish QM pattern and a head and shoulders top pattern? I do see the similarity. So I do totally understand why so many have asked this question. I'm sure you can see from the slide, there are clear differences between the two formations, despite both configurations offering reversal structure. Now, the head and shoulders top pattern, guys, just to let you know, the head and shoulders top pattern is one of the most widely followed and widely used chart patterns, and is very, according to a number of studies that were done on the head and shoulders, it's a very, very high probability pattern. So do look into that. So the first notable deviation in the QM is, of course, the right shoulder. So in the head and shoulders, we have the head and shoulders top pattern. We have a left shoulder ahead and a right shoulder. Now, in the bearish Quasimodo pattern, we only get the right shoulder when we're selling. So it's only at this point we're selling, and while to form a head and shoulders top, as in the example on the right slide, we require 3 peaks, but we don't require a right shoulder to form a bearish Quasimodo pattern, because we're actually selling at this point. We're selling before the right shoulder's even formed, if you're comparing to a head and shoulders. So look, you might be thinking that the QM does have a right shoulder, and look, I agree, it does have a right shoulder, and you would be right. However, this is where the QM traders, as I've said, enter the market. So they enter short at this point. You do not enter short on the right shoulder of a head and shoulders top pattern. So that's one clear difference. And this leads us to the second difference. Let me just get the pen back out. This leads us to the second difference, the neckline. So as you can see here, we have a neckline, which is joined by the troughs formed between the head of the formation. So trough 1, trough 2, and we join those low points to form a neckline. And for anyone that trades the head and shoulders top pattern, we wait for a close below the neckline, and we then trade short. Fair enough. But with the bearish QM pattern, can you imagine placing a neckline here? It would be incredibly difficult to trade this, because you would have to wait for price to come all the way down here before you sold. Where would you place your stop? Well, technically, a lot of traders, they sell on the break, and they place their stop above the right shoulder. Fair enough. But if you did the same with the bearish QM, you'd not only have missed your sell opportunity with the bearish QM, you'll be selling all the way down here and placing your stop all the way up here. Now, as you can imagine, risk to reward, or reward to risk, would be slightly out of favor. So that's the second one. Ideally, what you want to see for necklines is either a horizontal line, as we have here, or a slightly ascending line. So the trough ends there. But with the bearish QM, you've always got a descending line. You do not want to trade it like a head and shoulders. So that's the second, and they're the really two clear differences I note, and that I'm aware of. If you guys see something I'm not, please do let me know. I'm just going to check. All right, I'm getting a question: how to use Fibonacci in the Quasimodo pattern? Well, this would be something you would have to test. And look, with the QM pattern, you can use Fibonacci as well. Let me continue with the slides, and hopefully on the charts, I will be able to show you some Fibonacci alongside the bearish or bullish QMs. All right, so let me clear the drawings, guys, and let's move on. All right, so you'll also remember this slide from the previous presentation. This was where I touched on the psychological side of the pattern. I'm just going to quickly go over this. As the QM is a reversal structure, we do need some form of, let me get the highlighter. We do need some form of uptrend preceding the pattern. Obviously, higher highs, higher lows, higher highs, higher lows, and a series of higher highs and higher lows form the uptrend. Now, so with this being said, we're going to have breakout buyers above here, breakout buyers above here, and breakout buyers above here. I'm going to really simplify this because I did cover this last week. So we're going to have breakout buyers above here. We're also going to have sellers coming in, counter trend sellers coming in from this point here, looking to fade this high, this previous high here, and also if there's any resistance to the left. So we're going to have sellers here with their stops above there. So what are those stops? Those stops are buy orders, buy stops. So not only do we have buy stops above here from breakout buyers, we also have buy stops from those looking to fade, sell this part here. All right, so then you have the buyers trapped. What happens is we then form a lower low, and this takes out all of the trend traders, the dip buyers that bought this dip. So they're out of the market. Okay, so what happens then is the pullback at 0.5 as larger traders look to buy into all of those stops taken from the higher low. And as they're buying, they're also, I believe there are larger traders are also selling at this point because look, I'm not going to get into too much detail, but as larger traders attempt to fade the stops taken from below the previous higher low, which causes price to print a modest rally as they're buying into all of that sell stop momentum below those stops. You know, this is where we'll see sellers coming in from the trend traders that break the higher low at this point, and then we all know, right? Once the price has broken the higher low, we're then looking for sellers to come. Sellers will attempt to sell the pullback at 0.5, and it's here we're looking to sell. We're looking to sell the left shoulder again created by points 1 and 2. Legs 1 and 2, and we're looking to extend that, and we're looking to sell from this point here. We're not looking to sell here. We're not looking to sell here. Now, I actually look for resistance to be created in leg 5. So it's more in terms of, so we have, say, imagine we have a double top printed in leg 5. I'm looking for price to come down and then eventually break above that area to test that Quasimodo. The reason being is because I know if we create look, let me draw that in, guys, so you know what I'm saying. So if on leg 5 we create a double top, right, and we come down and you know, just we create a resistance at this point. This is going to attract sellers because of the lower low that's formed and the trend is heading lower, right? So we create a resistance and then I look to break above this area, take out all of those traders that sold at this point, and then sell here. So I'm looking for additional stops to take on the way there. I hope that makes sense, guys. I do understand it might be a little bit tricky for those newer traders here, but do ask me questions if you're unsure, and I'll clear this up on the slide. All right, so with that out of the way, I've really found that the best way to learn this is through repetition, right? And this is the point. I really do welcome questions, guys. So as you can see on the slide here, we have a monthly chart of the dollar CAD. Now, this is a relatively old chart, but I'm just going to go over this, and please do ask me questions once again. We have a low here. Now, this is a bullish Quasimodo pattern at this point here, bullish Quasimodo pattern. We have a low, we have a high. Now, I'm going to draw the bullish Quasimodo pattern here so we all know what we're looking at. Okay, and there we go. Okay, so that's the left shoulder, as I explained, bullish Quasimodo pattern. So as you can see, we have leg 1, which is here. We have leg 2, which is up here. We have leg 3, which is down here. Remember, guys, that's a bear trap. That's trapped the sellers there. And then we have leg 4 there. But price does not come back to test that area. It continues higher. So we continue higher. So all of this is leg 4, this point here. And then we come back, and what happens? Look at the strength of that move. No one in their right mind would want to be buying that. I certainly wouldn't. Especially after I just would not want to be buying the strength of that move at that point there. Anyway, so price breaks through this area. Let me just get rid of that awful drawing. There we go. Price breaks through that area with strength. So when price finally reaches this zone, this is actually called a Quasimodo support term resistance. Now, for anyone that reads my daily market analysis, you'll note I use this all the time. The Quasimodo supports turned resistances, Quasimodo resistances turned supports, and they work very, very nicely if they're plotted in the right locations. So as you can see, price retested the area once, formed a lower low, came back and retested the area again. Now, for anyone that's, for any of you chart pattern enthusiasts, you'll also note we have a double top at this point here as well. So I don't follow the dollar CAD too much, so I'm not sure where we're currently trading now. I'm not even sure if we reached that low to complete the pattern. So right, where can I? So we have a question here. Where can I view all these educational content videos? As you can see in the chat box, we have. It says it there. Shake. We can access the webinars recordings at either on YouTube or the main website. All right, so any questions on this one, guys? It's very, very simple here. We're just looking for, look, it's the same as we have a support, right? Support, 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 break, resistance, resistance. All right, it's exactly the same for the Quasimodo. All this is a Quasimodo support that failed to offer us a floor, and it's returned. It's become a resistance once it's tested again. Nothing more. Okay, so this is a really good example. Remember, this is the Quasimodo support, and all it is price. I'm just going to draw that in for you. Price breaks that area, comes back and retests that zone. Fair. All right, so look, just to give you some idea of what else you could have looked for at this point, you could have looked for this. Look at this. We have a nice area of supply taking this reaction here. We also have then another supply at this point here. Supply at this point, it's taken this area, taken this high at this point, this high at this point. So look, all the supplies are really taken out. It's obvious what's likely going to happen once we get to this area here. There's hardly going to be any unfilled sell orders around these areas here. Although, guys, this is the monthly time frame, so do be aware of that. But a whipsaw above this. This is what's known as stack supply for anyone that trades supply and demand, stack supply. So we know with a reasonably high probability that price will whipsaw above all of these stops that are involved here and take on the Quasimodo support term resistance because it's relatively hidden and no one's really looking at that. And this is what the larger players, I believe, I cannot prove that, of course, but it served me very, very well. And this is what I believe the larger players are looking for. They're looking to take out stops. They're looking to create themselves pools of liquidity, which they can buy and sell into. So I hope this is helpful. Let me just clear the drawings and we'll move our way to the next slide. Oh, this is the same slide, guys, really. So this is more of a complex head and shoulders, if you will. Let me just get the pen out. This is more of a complex. So now we're looking at this Quasimodo support at this point here. So there is also something called the four-leg structure, okay? Four-leg structure. So instead of the, so let me draw the Quasimodo support in once more, and then we're back again. Just bear with me. So this is the Quasimodo support, and how we know that is we know that it's a reversal structure that requires a downtrend to precede its formation. But with a four-leg structure, and guys, just to be clear, I'm unaware of anyone else that trades this four-leg structure. I haven't looked, so if anyone else does trade this, fantastic. I've not intentionally copied this from anywhere. The Quasimodo support four-leg structure is something I've seen on the charts, and it works very nicely. Anyway, so we can see that we have a Quasimodo support at this point. We have leg. This will be leg 1, leg 2, leg 3, and then leg 4. And then we come back and we have leg 5 at this point here. Now, the difference is the Quasimodo pattern is not active until we break above here, right? So all of this just makes it a complex pattern. So we have 2 bear traps at this point here. The only difference is with the four-leg structure, we don't have that downtrend, right? We don't have the lower lows and lower highs and things like that. We just have a brief pop lower within the uptrend. So you can also use this as a continuation structure, as you can see here. Okay, and very similar to this one as well, to be quite frank with you, although we do have a couple of lower lows and lower highs, this is almost like a 4-leg structure as well. So this is something to be aware of. A 4-leg structure can also appear minus the downtrend that has to precede the pattern, or minus an uptrend that has to precede the bearish Quasimodo pattern. Look, the charts are not always going to be perfect. I'm sure we're all aware of that. You're never going to see the perfect formation. There's always going to be some differences in its structure, but as long as the charts rhyme, if you will, they offer this similar structure, you're pretty good to go. So any questions on these charts? Let me just check. Okay, thank you. Look, I'm just going to call you Doctor, because that's your first initial there. One more QM near the down point. Okay, which part are you looking at? Can you give me a rough value? You said there's a QM pattern near the down. You'll have to point me to the value roughly, or the date would be good, and I'll happily highlight that. If you're talking about here, let me just get the line. There is one there at this point here. As you can see, this is the second touchdown. Ooh, you have to be a bit more clearer than that, I'm afraid. We have one here, low, high, lower, low, and we don't activate the bullish, the support, Quasimodo support, until we break here. So we do have a Quasimodo support at this point here. We also have, this one, yeah, okay, fantastic. Yes, so that 100%, this is one, yes, of course. This is one Quasimodo support. That's fantastic that you're recognizing them. Brilliant. Right, so let me remove these drawings. I have one more chart, I believe, and then we're heading to the live charts. So this is a euro pound, and I think I highlighted this in the last webinar. I'm not sure, but look, this is just a H1 chart of euro pound, as I said, and really I've just highlighted a few bearish and bullish Quasimodo supports and bearish Quasimodo resistances. So really, let me just get the pen again, and we can highlight, or the spotlight would be better. As you can see here, we have a Quasimodo support, a low. So this is the traditional one, right? So this is where we need the lower lows, lower highs. We're in a downtrend at this point here, and this is a traditional support and resist Quasimodo support. So we have the leg 1, leg 2, leg 3, the bearish, the bear trap, and leg 4, and then leg 5 at this point here. But look what happens. We really do not react to this level. But what happens? Remember what I said on the previous slide? Let me go. Oh, I cannot go back because I've got the highlighter on. But remember what I said. If we break through this level relatively cleanly, then we could end up with a nice trade here as a Quasimodo support turned resistance. Now, I just want to bring this to your attention. What do you see below here? What do you see below this, this almost hidden Quasimodo support turned resistance? What do you see in terms of levels to take? Okay, if I see the chat box relatively empty for the next 10 seconds, I'll go ahead and write this on. So I'm looking for what we see below here. If anyone can answer that, that would be fantastic. If not, no worries. Right, I'll go ahead and draw this in. Right, so we have this easy to recognize supply, right? We have a supply here. It's not the best supply. Look, I do prefer easier to, better supply zones than this, but it is a supply nonetheless. We have a supply here. We have a reaction here. We have a subsequent lower low at this point here. And then we follow up and retest this area again. Look, it's obvious sellers are interested in this area. It's obvious we are in a downtrend. So a whipsaw above all of this action here, preferably taking out these stops above here. Look, traders are going to have their stops above here, and some traders will have their stops above here. Well, that's what I mean. And look, the whipsaw above here tests what? Tests this Quasimodo support term resistance beautifully and then reacts. All right, you don't need much of a move to make money. This is the H1 time frame, guys. And you can see how accurate these QM levels are. Okay, then we have another bullish a Quasimodo support at this point, low, high, lower, low, and a leg 5 that fails. This is a failing setup. This is a setup that failed. Not all of them will work. Trading's not about being right or wrong, guys. It's a business where you have to accept your losses. You have to become a master of accepting your losses, and you have to become a master of accepting that you will be wrong. 2 double whammies of hurt in one go. That's why I believe so many traders struggle with this, because they want this next trade to win. They want this next trade to be correct. It doesn't work like that, unfortunately. Trading is an odds game. It's a game of probabilities, and you can never possibly ever know that whether the next trade will be a winner or a loser. Anyway, so we have a left shoulder here and so leg 1, leg 2, leg 3, leg 4, and then leg 5 for a beautiful reaction at this point here. We have another Quasimodo resistance here, left shoulder. So this is leg 1, leg 2, leg 3, the bull trap, leg 4, and then we continue higher. But you may have been stopped out. If you'd have had your stop above the peak. Now, commonly, what we do is we set our stops above the peak, and then we sell at this point. I'm going to go over in more detail with this shortly, but we sell at this point, and we have our stops above here. So look, feel free to test this, back test this, and how you feel. You might want to place that above the supply there, in which case you would have been probably okay for a break-even trade or a one-to-one trade. But generally what we do is we look for longs at this point here, and then we place our stops below the apex, if you will, of the pattern structure. Any questions, guys, on this chart? Please feel free. Before that, otherwise I will move to the just bear with me, guys. I'll move to the live trading chart. All right, so I see a relatively quiet chat room. Fantastic. It means you're all understanding what I'm saying. So bear with me. Just share my screen. Oh, we have a question, I believe. We have a question from Raphael. What would you look for at the lower time frame? That's a fantastic question. And look, I will answer that very shortly on the live charts. I do have a couple of charts for that. We have a question from the doctor. Any indicators? Look, doctor, please step away from the indicators for now. Let's just focus on price action. Look, most of the indicators, 99% of the indicators are derived from price action. So what you're seeing these indicators tell you is what price action's already told you. So they are derived from price action. Become a master of price action. That was what my mentor told me, and it really paid dividends. Stop relying on indicators. Indicators are only repeating what price action's already done. So so you can spot when momentum. So for instance, here, guys, look, you can spot. I hope you can still see my chart. You can spot momentum is slowing to the downside. What you'll see now is the RSI turning up and giving you bullish divergence. Now, I'm not saying do not look at indicators. I'm saying that once you attain a level of proficiency with the charts, that you're confident and you can see what's going on, you can use the RSI to make it easier for your eye and quicker. That's my opinion with that. Right, so let me just spin things over to the charts. Look, I can't find my thingy, so bear with me. Here we go. All right, so these are the main charts that I use for my daily market analysis, which I'm currently in the process of preparing for ahead of tomorrow's FOMC event. So let's begin with the dollar CAD on the H1 time frame. As you can see now, guys, this is a live chart. Here we can go over exits, entries and exits, whether the formation, is against the trend. Do I look for that against the trend? Would I trade against the trend? Do I trade with the trend? Of course, I'm going to say always trade with the trend, because it's always, especially for any newer traders, guys, it's just such a better way of trading, especially for newer traders, in my opinion. We can also look if there are any Quasimodo supports and things like that. Now, we did have a question from, I believe it was Raphael. What would you look for at the lower time frame? Now, what I would do, I wouldn't precisely look at the lower time frames. I would look to converge the lower time frames with the higher time frames. So, as you can see here, we have the dollar CAD with the H1 time frame. So, this is the H1 time frame. I'm going to start with this area here. So let's focus our attention on this area at this point here. Forget this over here. So this is a H1 QM. Let's zoom in so we get a nice clear view. This is the high. This is the low. This is the high. So we have leg 1. Remember that, leg 1, leg 2, leg 3, leg 4, and we're yet to complete leg 5. All right. So this is an open QM pattern. Now, what would I do? Would I look to trade this? Quite possibly, but look, have you seen any resistance form here? There's nothing here telling me that resistance is forming here yet. What I would like to see is a resistance form at this point here. So like a double top or something, and then we come out and whipsaw above this to test this area here. Now, Raphael, to your question that you had, which is a very good question, by the way, we can zoom down. So this is the H1. Let's go down to the M5. All right, so this is the left shoulder on the H1 time frame. H1, high from the H1, the subsequent lower low on the H1. Now, what we do is we drill into this area here. We drill in, all right? So as you can see, the M5, it's dropped lower here. And what we've done is we formed, let me just take this. We formed a kink. This is what I call a kink or a supply, whatever you want to call it, a decision point. We formed an area here. Now, you can use this area to base your entry and exit. What you can do, instead of placing your stop above the peak of the pattern here, you can really reduce your risk. You can place your entry here and place your stop above here. But would you feel comfortable trading this area of supply, knowing it was already tested? This is a question, guys, you can answer in the chat box. Would you feel comfortable knowing that we have a supply surrounding this level that's already been tested? Would you feel comfortable trading that? There's no right or wrong really here. It's just my opinion. Steve, yes, it does. It works on any time frame. 15 minutes, I can see your examples there. 5 minutes, M1, monthly time frames. It does. It's a really strong pattern. I prefer the QM support turned resistances rather than the basic QM structure. So the QM support turn resistance or the QM resistance turn supports, I much prefer them, and I look for them in areas where I know there will be pain in the market, where I know there will be, with a high probability, there will be pain in the market. Now, I've already explained that roughly, weakness, strength, in terms of stops and things. So I hope that answers your question, Steve. So I hope that I haven't seen anyone answer this question. So for me personally, I would never trade this with, I would not trade this. That does not mean it would not give you, it would not provide you a rejection. But ultimately, what you're looking for is the area that surrounds the left shoulder. So we have the left shoulder here from the H1. We extend that through all of this fake out. And then we're looking for the final supply area that surrounds that left shoulder. So then we have the area and we can work with that area. Now, if we drop from here sharply and did not retest the area, we have a fresh level. Now, this is something you could possibly trade. But would you still want to see something broken or breached on the approach? 100%, you should be looking for that. You should be looking for pain in every trade you take. You should be looking for weakness. Look, guys, I'm saying you should. I'm almost talking to myself here, because this is what I say to myself before every trade. I look for pain. I look for weakness. I look for an area of strength that I know would possibly react. So as you can see, we're back on the H1 time frame here. And this is what you're left with, a relatively hidden kink, right? So you could potentially take a short at this point here with your stop just above here. Or for conservative traders, guys, place it above the peak. It's totally up to you. But for me personally, I would not take this trade. Now, this is another example I wanted to show you. Again, another bearish Quasimodo pattern. You can see it here. Let's zoom down to the M5. Let's go down to the M5. So this is this one, right? So this is the H1 left shoulder. We've extended through all of this. Now, look, there's nothing here. There is nothing here. So would I trade this? Probably not, because there's nothing supporting it. Now let's go down to the M1. Let's see if we can get anything on the M1 time frame. Let's even see if we can get data that far back. All right, so look, let me see if there's a kink. So we do not really have anything here. Look, this is the left shoulder. We're looking for something to form here. We're looking for an area. We do have this kink here, this small kink here, but it's not enclosing it. We want to see something enclose this area and drop. I hope that makes sense. There's nothing here. So this could have really kept us out of a bad trade, because look what happened. Look what happened. As you can see, price did react a tiny bit. It offered, it actually offered, I didn't even notice that before the webinar, but look, it did actually offer a drop of around 27, of around 17 odd pips. So it's not a bad trade, I guess. It's a one-to-one trade, but it's not something I would have ever traded. And eventually we did whipsaw to the upside. All right, so no questions on this, guys. I hope it's all good stuff and you're really learning something from it. But let's move on to the next slide. Now, as you can see, this is the pound yen for the H4 time frame. Let me see if there's a... Okay, we've answered that. We've answered that question. Right, so this is the H4 time frame. Look, I've really just picked out a QM pattern. So there's another way of confirming your QM pattern. So instead of, okay, so if you cannot find a kink within this area here, so let's go down to the H1, just to make it a little bit clearer. So if you cannot find a kink or supply at this point here, what would you do? Would you leave it like you did on the H1 time frame here? Or what you could do, an alternative, is you could wait for price to react from that level, from that QM level, and then drill down to the lower timeframes, and then look for another QM, bearish QM. So you're looking for a QM within a QM. So let's shoot down to the, I think it was the M5 I found one on. All right, so this is the left shoulder from the H1, and this is the M5 price action. So as you can see, let me remove this. No, keep that on this, all right. So we have a high. It's not exact at the moment. We have a high at this point here, low, higher high, lower low, and a subsequent retest of that QM. So what you're seeing here is a QM within a QM. Remember, left shoulder, leg one, leg two. Let me draw that on. Let me just get the pen out. Left shoulder. Okay, whoops, I didn't mean to draw that much. I'm sorry, I didn't mean to delete all of that. Okay, and then we have this, then we have the left shoulder at this point here. So this is leg one, leg two at this point, leg three, leg four, leg five. So we have leg one, leg two at this point, leg three up here, leg four at this point here, and a subsequent leg five at this point here. It's exactly the same, guys. There's nothing different here from this drawing to that. It's just, it's different. It's just, it looks a little bit different because the charts are never, ever going to be the same. They're always going to be a little bit different. As you can see here, it's a little bit of a tighter leg one and legs one and two. That's the only difference. But what you have here is it's just a mouth, you know, a really great M5 setup bolstered by a H1 QM formation. Nothing more. And look at the reaction from this area and look at the drop. It's fantastic. The risk to reward on this trade is just phenomenal. Okay, we have a question from Raphael. How far the legs can be apart to be a valid QM? Now, I assume you mean from this leg to this leg, legs 4 and 5. there's no hard and fast rule, to be quite fair. There's no hard and fast rule really. But as you can see, let me remove these drawings. What you can see here, if we go back to the H1, we have a leg 1, leg 2, leg 3, leg 4, and look how deep the leg 4 drops. So look, they're all valid levels, in my opinion. They're all valid levels. But if you're unsure and there's been price has been away from the level for a long duration, then I would always look for lower time frame confirmation to confirm that there are sellers interested here. With a high probability that they are going to be interested, and simply take the trade based on that. You can never know 100% whether a level will bounce or not, but I like to put the odds in my favor, and I hope you do too. And so we can first look for the kink, the supply with the bearish QM, or the demand with the bullish QM. Alternatively, we can also look for lower time frame confirmation at the level when it's tested in the form of another bearish QM in this case, or a bullish QM in the case of a bullish Quasimodo support. All right, so I have one more chart. I think it's the euro dollar for my current analysis. So as you can see, for anyone that does follow my daily market analysis, you'll recognize these charts. We have look at this. Look, I'm sure you can recognize this. The upper chart here, the upper left chart, is a Quasimodo support term resistance. Now, this is direct from my market analysis. As I said, we have a left shoulder here. Sorry, a leg 1, leg 2, leg 3, a continuation, leg 4, right up to here, and then we break lower. Now, I would not want to be buying at this level anyway. It's clear that sentiment is to the downside. This is the weekly time frame as well, guys. Sentiment is clearly down to the downside. So I would wait for a break, and a break we got. We broke lower on the 25th of April of this year, and then we subsequently look at that retest. Look at that retest. We retested that level almost to the pip. This is the weekly time frame. So what you could have done at this point here is gone down to the higher time frames and quite simply looked for a bearish QM. Now, if you can see my cursor on the upper right chart, the H4 time frame, you'll see that there is a bearish QM there on the H4 time frame. Now, remember this on the weekly time frame. This come in around the 30th of May. I haven't seen this. This is something I just noticed. So let me draw that on. Let me find the pen. We have this is the area that hit the weekly Quasimodo support term resistance. As you can see, we have a left shoulder here. It's just almost pit perfect for this. We have this. We have the leg 1, leg 2, leg 3, leg 4. We formed a lower low, and then we retest the area at this point here and here, and then we continue lower. So we're looking for higher time frame barriers, and we're looking to confirm that on the H4 or H1 time frame. It's the weekly time frame, guys. And look at the power, the force that come out of that move there. So I hope this really shows that you can look for. I always look for a multi-time frame. I always look at multi-time frame analysis. So I hope that helps really show what I do on a daily basis, really. So yes. Any questions, guys? Please, this is really the time to ask away. Or any setups you're looking at, please do let me know. Just to reaffirm that these can be traded on all time frames, and really you should always take trend into account. Always take trend into account. I mean, for instance, you would not want to be buying here, right? The trend is clearly to the downside. You would look for a break to the downside and a follow up, as we just discussed, follow up as resistance. Is it good? We have a question here. Is it good in range or consolidation market? Would I trade this in a range? Alongside the trend, yes, I probably would trade this within a range. As you can see on the H1 right now, we were ranging on the euro dollar. Would I have taken a Quasimodo pattern in line with the trend? I'm just trying to find one here. I cannot find one. So yes, they can. What they can do is they can form the upper limits of your range and the lower limits of your range, if that makes sense. So the upper limit would be a bearish QM, and the lower limit would be a bullish QM. QM most commonly found in range markets. Not really, no. No, to be honest, no. In my opinion, no, they're not. So the QM is mainly found in trending markets. So you can see here the euro, we break lower, we look for a break, and we look for a retest. This is something, do you use breaking bands for confirmation? What do you mean by breaking bands, Raphael? Breaking bands, do you mean Bollinger Bands? To confirm the breakout below the QM or something like that, I guess. Yeah, so look, that's totally up to you. I don't use that. I just use, look, as I said, I tend to stay away from, as you can see, I've got the RSI on my daily chart at the bottom there. I use that mainly just because I've studied price action so much, so intensely now that it's almost a lazy way of me looking for divergences. But other than that, I do not really use indicators to confirm anything. Look, you have a number of filters, right? You can use for confirming a breakout. You have the moving averages, you have time filters, you have the closing prices, you have Bollinger Bands, as you quite rightly said, you have pivot points. You know, the world is your oyster if you in terms of confirmation techniques. My answer to this is always backtest this and just find out what works for you. If you find that using Bollinger Bands helps, by all means use that. You know, there's no right or wrong here. You're free to experiment as much as you possibly can to put the odds in your favor. Okie dokie. So I'm going to reshare my screen and bring this. All right. So live analysis. Here we go. Right, guys. All right, thank you, Raphael. I hope that was helpful. Look, as I look to wrap things up, any comments or feedback, as you can see on the emails here, support team at fpmarkets.com or market analyst at fpmarkets.com. These are the emails you use to contact us. If you have any questions regarding tonight's content, please do also send over any suggestions you have for future webinars. The next webinars for August, guys, are we'll be looking at fundamental analysis, and this is for beginners. This will be on the 8th of, just bear with me, my eyes, the 9th of August, excuse me, 9th of August, and that's at the same time. We also have another webinar, which is a very, very interesting one, in my opinion, Supply and Demand, an Essential Guide, and that will be on the 23rd of August at the same time, guys. And so, yes, do also make sure to register for our FP Markets Telegram channel. This is something that we are developing and we are continually posting on. The FP Markets Telegram channel link will be in the chat, but will be now in the chat box. And you can also go to the main website and find the sign up link at the bottom left-hand corner of the website. I'm just going to quickly check if I have any more questions. You are very welcome, guys. Thank you for all the thank yous. You're very welcome, Tim. You're very welcome, Doctor. You're very welcome, Raphael. I hope it's been useful. I hope you can take something from this. Again, look, my email's there, guys, marketanalyst@fpmarkets.com. If you're struggling with this, if you do not understand something I spoke about, I'm more than happy to reply with a more detailed explanation if it's required. Question here, do you publish your daily analysis on the Telegram channel? I certainly do. It's there every day and it will be uploaded around 9 p.m. UK time, just at the US close, guys. So my analysis for the next day, the technical analysis, will be posted around the US closing time. All right, so if there's no more questions, I'm just going to check the chat box. All right, so if there's no more questions, I do hope it's been useful. Thank you very much for taking the time to attend the presentation. Have a fantastic evening, morning, or afternoon, wherever you're based in the world. And I'll see you all again very, very soon. Thank you so much, guys.